This is the New York Stock Exchange, where investors make upwards of 1 billion trades in a single day. Many of those trades happen in a matter of milliseconds, except not really. Trades on Wall Street actually take days to settle, and lots of people to make them happen.
Take market makers, for instance. They're the middlemen handling all those trades on Wall Street, and the top 5 market makers handle nearly 30% of all trades.
The truth is, these intermediaries help with volatility, but they also create a gap between buyers and sellers in markets. And there are a lot of gaps throughout the financial system. Ever noticed how long some bank transfers take?
Think about infrastructure, and I mean large-scale financial infrastructure, globally or nationally or whatever. It is actually a highly siloed infrastructure, generally speaking. So money moves on one set of rails, assets move on a different set of rails, et cetera, et cetera.
Banking titans like JP Morgan, Citi, and Goldman Sachs think they have a solution. They want to push the American financial system into the next generation, and they need to borrow a tool from crypto, blockchains, on which they would tokenize various assets.
Digital first economy that we're moving towards is really important. As our clients embark on this
As I've been saying, the tokenization of the world. Now we're seeing these global banks and these standard institutions such as the markets, the stock market, the New York stock market. With the advent of blockchain and cryptocurrency, they will look to really revolutionize the way they do business. So we're living in interesting times, very interesting times.
digital journey, being able to move money 24/7, 365 in a programmable fashion with always on is what we really want to enable our clients.
Analysts at Citi actually think tokenization using blockchains could become a $5 trillion industry by 2030.
Let's be clear, tokenizing isn't exactly new.
Well, we've been tokenizing assets in the financial markets for literally hundreds of years. When you think about a traditional stock certificate, is nothing more than a token that represents ownership of a piece of a company. This old asset was a bearer asset. If you wanted to transfer it to somebody, you would sign it on the back, hand it to them, and then they were considered to be the owner.
Electronic trading and modern payment processors have accelerated the global financial system to move assets much faster. But Wall Street still operates on what's called T+2, or trade plus 2 days. That's how long it takes for assets and cash to change hands. Part of the slowness is due to just how many steps and people are involved. On Wall Street, for instance, brokers help set up a transaction and they can charge a commission. Then market makers connect brokers to the assets they're trying to buy or sell. They charge a fee too on the difference, or spread, of the asking price of an asset and what someone is willing to pay. Oh, and huge transactions will need to go through even more steps for security and fraud prevention. Some big banks are hoping tokenization on blockchains can streamline the process of trading assets and maybe make it cheaper. To get how
all these middlemen and people that have to participate really does increase the time or the length for settlement, right? With all these people could easily become smart contracts and be automated and expedite this at a much greater speed than we need, because right now it's way too slow. And being in 2023 and the different hands that still have to touch it, and it's taking 2-3 business days for a contract to go through or for you to receive your money after a trade is actually kind of ridiculous.
Tokenization works, we need to talk a little bit about ownership in the digital era. Right now, it's hard to transfer ownership of real-world items over the web. Sure, you might, say, buy a car through an online marketplace, but the title that proves you own it will come as a piece of paper in the mail a few weeks later. In the hopes of bringing ownership online, developers are creating tokens that represent real-world items.
The great thing is we can do this with almost any kind of an asset. It could be a traditional stock or bond. It could represent ownership of a building. It could represent ownership of a car. It can represent ownership of virtual property in some game land.
The banks backing this technology think it could expedite trading across Wall Street and maybe create new investments altogether. That's why they're putting their money behind it. For example, JP Morgan has Onyx, a blockchain platform it launched in 2020. In the short time since then, it's handled $700 billion in short-term loans through its private blockchain. JP Morgan says it's a killer app for the future of finance.
So we have a platform called Onyx Digital Assets, which is You can almost think of it as a general purpose tokenization platform with money that's provided through our money solution, which is called JPM Coin. And now because you can tokenize the security and
JP Morgan, probably one of, or if not the biggest, most respected banking institution in the world, is already jumping ahead with tokenization. So this is just not a small thing that's coming around. This is something that's going to completely change our financial system. It's something to keep an eye out for. It's going to be interesting times.
You have the money on the same infrastructure, you can potentially do a transaction for 15 minutes or 20 minutes or 2 hours.
And Larry Fink, the CEO of investment giant BlackRock, called digital assets innovation in tokenization the next generation for markets. But even with all that promise, how realistic is it that this will actually get implemented?
So you're definitely seeing a lot more experimentation. What we're seeing as a result is it's a gradual movement forward. This is not going to happen in a year. It's not going to happen in 3. It's going to take some time, and I think it's going to be a lot of it's going to be baby steps.
If banks and asset managers want to participate in the modernization of financial markets, they'll have to adopt blockchain and tokenization, according to Bernstein. In a report from June 2023, the firm said it sees $5 trillion of real-world financial assets being tokenized on blockchains over the next 5 years. Attempts to deploy blockchain tech in
Hello. Giza.
traditional financial markets have been bumpy. The industry tried to use it for tokenization back in 2015 and 2016, but the hype faded. The financial system is one of the most regulated industries in the world, and making changes is slow going. Multiple agencies like the SEC and the Treasury would have to get involved, and big bureaucratic government agencies are slow to change. In the SEC's case, officials there are super skeptical of crypto and blockchain technology after the collapse of crypto businesses in
This might take some time, but it's definitely coming. And these banking institutions, they're preparing and gearing up to make this huge change in the way we really see money, or the way we transact with money on a global scale.
2022. They just sued Coinbase and Binance, 2 of the largest crypto exchanges in the world. The agency is also considering alternatives to speeding up Wall Street. It just approved a transition to T+1, which would settle transactions faster. That new rule would go into effect in 2024. There are obstacles overseas as well. The Australian Stock Exchange actually gave up on its plan to use blockchain for its infrastructure after a study found its test program needed an overhaul. Regulators there decided it just wasn't worth it.
ASX said, hey, we're going to do all our post-trade processing on blockchain. And they went through a very large, very expensive process to re-engineer what happens after a trade. If you understand the plumbing of how markets work, it's pretty complicated for how the ownership interest of the buyer gets transferred to the seller, and the money gets from the seller to the buyer. There are plenty of people who are keeping separate databases about that transaction. And that's sort of a natural area where blockchain, has potential. But even ASX said only 10 or 15% of that particular project was blockchain, but the project was an utter failure.
With that in mind, the New York Stock Exchange might be one of the last places to implement this technology.
If you're trying to apply blockchain to a very high-performing asset class, so think about equity trading. Equities trading is extremely high volume, very low latency. It's a very efficient market. I'm not really sure that you can replace some of that infrastructure with blockchain and get a gain out of it. Or on the other side, you can think of some really, really complex classes like syndicated loans, which are extremely complex and tons of people have to sign off, lots of people have to agree. That may be too tough to solve with the blockchain. I fully agree. I think blockchain solves a subset of the problems. And the rest of the problems either can be solved better through a centralized infrastructure or through some other means or a consortia or something like that. But it is definitely not a cure-all.
What will really determine if tokenization on blockchains take off is if people and businesses see a benefit and maybe don't even know they're using blockchain at all.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.
That was an interesting take. I think it's interesting. The world is going to change so much. And one thing that I was thinking while watching this video is, with all these different servers or these different bank institutions and traders having their own separate servers, in some sense, this is kind of where they get the advantage of arbitrage trading. But if everything is on one central database, such as the blockchain, does it give less opportunity for arbitrage trade? So that's one thing. But yeah, interesting video. Future's bright.